morning, traders. I'm here again. I could do a quick video of tying it all together. So with my tying it all together, I'm going to go into depth on how I use my support and resistance. I'm going to depth on market structure. I'm going to go into depth on understanding candlestick analysis. I'm going to go into depth on time frame correlation, and more than likely I'll throw in Fibonacci retracement. So boom, let's jump right into it because that's how we do it. So starting off, me breaking down this setup, me breaking down this chart is how I will break down a chart if I had no drawing tools on here, nothing. So as you can see, guys, I'm starting off from a higher time frame. So the reason I'm coming from this higher time frame is because, when you're riding on the airplane and the airplane is trying to find a runway, it has to start up high before it gets down to the ground to that low point. So I'm starting up high simply because I want to see what's going on in my overall momentum. I want to see the overall structure of the entire pair itself. So when I'm drawing my support and resistance lines, I go to my line chart, and my line chart, I'm finding points that match up with each other. So I have a level of resistance right here, right here, right here. I have a level of support right here. It's basically lined up with that level of resistance. As you can see right here, I have a level of resistance, found support. Back over here, it's at a level of resistance. So only thing I'm looking for is key levels, the points that matter. And I use color coding for the resistance levels. So my monthly is black. And I only want to find my key levels right now. The reason I'm only searching for my key levels are because my key levels, those are the points that matter the most. And the reason I'm going to put a level of support down here, on this point right here at this level of support, 1, 2, 3, 4, because the market came down to this spot 4 times, and that was a level of support that was hard to be broken. So let me scoop this up just a little bit and back to my candle chart to see how we looking. So as you can see on my candle chart, the market found support right here, resistance, push up, resistance, respect it. We're not looking up right here. We're trying to find where we're currently at in the market. So dropping down to my lower time frame, we're seeing on this lower time frame, I have overall sellers momentum in control. Zooming out, always zoom out. Zooming out, I see we're in the overall downtrend. So being in the overall downtrend, I'm looking for new lows and new lower highs. Coming down to my weekly time frame, I understand with basically my indecision levels for my monthly time frame drawn out. I want to see where we're currently at in price. So I see the market found some level of support right here. So this is what I'm going to do. I'm going to say, okay, this level of support right here, that's a weekly level of support that the market came to find. And I'm going to do my weekly level of support. I'm going to do it. So with my weekly level of support, I'm paying attention to details. Where we're currently at in the market, we're on a weekly time frame. So understand each candle is 1 week. So looking into details, I'm forming lower lows, lower highs, lower highs. It took since October 2018 to break this level of support. So now that we have a break and a minor retest, this is what we can do now. We understand that we're at a lower high point in the market. So I can grab a random line. I'm going to still put this random line purple, but pay attention to what I'm doing. I have a low point, and as you can see at that low point right here, the market came back and touched that level. And the reason I'm drawing this random line is because I'm considering this as a median. I had a minor touch right here, trying to even it up as best as possible so you can understand. So this is my median point. I had a touch right here, 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 right here, right here, and right here. So that's my random line. And me having that random line, I'm dropping down to my daily time frame because now I have my levels of support and I have my levels of resistance from my higher time frames. So getting down into depth, I know my key levels. I'm going to put that random line purple. This is basically a level of resistance from my weekly. So understanding where we're at, the market opened up last week over here. So with the market opening up over here, I'm paying attention to market structure. My main thing I'm focused on right now is market structure. Where are we at in the market? If you don't know where you're at in the market, you're going to forever be lost. You're going to forever lose money because you don't know where you're at in the market. You don't know if you're at a high point. You don't know if you're at a low point. You don't know if you're going to buy or sell. So you must know where you're at in the market. So breaking this setup down, okay, I find my levels of support and resistance. I understand my overall trend. Now what I'm trying to do is read my candle patterns and see what the market is telling me. Because always remember, candles tell you a story. Candles tell you the traders' actions and reactions on how the market is, reacting to how our psychology of trading is. So, paying attention. I'm at a low point. It's a lower high. I got a new lower low. So with that new lower low, I pull my Fibonacci retracement out. When I pull my fibs out, always pull your fibs from a high point to a low point. So with my fibs being pulled from a high point to a low point, I'm measuring this minor retracement right here. This is the retracement I want to measure to see how far did it retrace before it pushed back. I have a 23.6 retracement. This 23.6 retracement is basically, it isn't a valid PRZ. So this means consolidation, continuation. So I continue to pull my fibs down. Can't measure that. So now I'm at my low point. Pull your fibs. You always pull it from your high point to your low point. I'm at my new low point, and as you can see, I have confluence in this area, guys. When I say confluence, confluence is multiple confirmations at one time in order for me to take action to a setup or a trade. So look where we're at right now. As you guys can see, this is my weekly resistance. I'm at a 38.2 retracement, measuring this PRZ, this retracement. This retracement has not broken structure because we're on a daily time frame. Structure might be broken on a lower time frame, but understanding where you're at in your overall structure, and we're at a 38.2 level. So I'm drawing this green box out from the top of my wick, basically at my level of my weekly level of resistance, down to where the market found that 38.2 retracement. So now I have a zone. Market is in a zone of confluence. So I have a weekly level of resistance. I have buyer's exhaustion in this area. I have market trying to form bearish engulfing. I have the market forming tweezer tops. I'm at a 38.2. I have enough confirmations to drop down to the lower time frame to see how and why can I take an entry. So now that I'm looking for an entry at these high points, my confirmations, they're all valid. I have all valid confirmations to even attempt to find a sell. So as you can see, as I mentioned, on the lower time frame, structure is broken. So I have higher highs, higher lows, higher highs, higher lows. But understand, we're in an overall uptrend. So when breaking down these setups, the main thing you want to find is where you're at in structure. So with me personally, a lot of traders want to try and jump in up top. Me, I want to find as much confirmations as possible to get into an order to where I'm comfortable with holding in that order. If I jump in up here, and for instance, I set like a 6, 7, 10 pip stop loss. Well, it's not bad to set a 10 pip stop loss on AUD USD, but just in general, being up so high, new traders tying it all together, I want y'all to be able to adjust and be comfortable with, where you're at in the market. So the reason I'm drawing this box out right here, is remember, I mentioned this is a higher low point. A higher low point. So now what I'm looking for is a break of this higher low point. Always remember market structure. If a higher low is broken, market forms a new lower low and a new lower high. But paying attention to details on the daily time frame, this is that bearish engulfing pattern. As you can see, we have a double top. And that double top means basically the market tried to break this level 2 times, but it was not able to. I got a retest of my neckline, and as you can see, the market dropped. So putting it all together is basically, I have a break of that higher low point. So once I get that break of this higher low point, I see, okay, the market has formed a lot of sellers exhaustion, and the market is pushing back. My EMAs have crossed over already. So I have overall sellers momentum in the market. So cool. Now that I have overall sellers momentum in the market, let me drop down to the 30-minute time frame to try and find an entry, or let me drop down to the M15. But just being, safe, tying it all together, we'll go down to my one time frame to see what's going on at that lower low point and at this lower high point. So, understanding that structure was broken right here, this green box, structure was broken, and higher low was broken, the market found a new low point. And at this new low point, see the market formed, some type of bearish push, sellers exhaustion push up. But you look right here, into details on where we're at right here. Reading candlestick patterns, you have to understand that, when sellers are in control, they tell you they're in control. So reading these patterns right here, as you can see, I have tweezer tops and I have a bearish engulfing pattern. I have an engulfing pattern right here, and this is just from my H1 time frame. I'm just checking on my H1 time frame. I'm not on H1 to take entries. The lowest time frame the highest time frame you should take entry off of is the M30 time frame. So getting into depth, dropping down to my M30 to my H4, simply because I have enough confirmations on why I should take entry. I had a break of structure. Now I'm at a lower high point. So getting into depth, going from H1 to M30, as you can see, what I just showed you, that engulfing on a lower time frame on that H1 time frame is a perfect bearish engulfing. Would I take this setup right here? Would I? I wouldn't take this setup right here. You know why I wouldn't take this setup right here? Because I don't have enough momentum to push the market back down. Look at my moving averages. My moving averages are blue over red, saying I have overall buyers in control of the market. Pay attention to what's going on. You could have took entry right here, have a stop loss probably above, but now that I have this break retest, I want to find either entry to where I have that crossover. So another entry point could have been, around this area right here, because you're saying basically buyers are tired of pushing the market up, and we got sellers stepping in. So if you was to take entry right here, would have been, you wouldn't, how do I put this? If you was to take entry right here, you would probably got 3 pips drawdown. 3 pips drawdown. If you would have took entry right here, I mean, it's literally about the same. 6 pip drawdown, not a big old difference, but when tying it all together, you have to be able to understand where you're at in the market. So maintaining your order, say you took entries up here, maintain your order, you're at a new low, you're at a new lower high point. That could have been another entry right here at this point. Boom, bearish engulfing. Pulling my fibs out, trying to see, okay, now the market is forming new lows and new highs. So this is what I'm gonna do. I'm gonna set my stop loss at 120 or 110% on my Fibonacci ratio, simply because I know if the market pushes up and breaks past this level, the market is going to it's gonna continue back to the upside. So, just maintaining my order. I'm watching, I'm letting structure form. As you can see now, I got a lower low, lower high. I got a low point, new lower low, lower high point. This lower high point, I could have dropped into the lower time frame to see, to analyze, to break down this setup, break down what's going on in the market. That's the major thing. You got to know what's going on. And using time frame correlation is major, because if you don't know where you're at, breaking down these chart setups, you'll just be lost. So as you guys can see, at this exact same point that I showed you from my M30 time frame, we had a bearish variation at this point, at this high point. And at that bearish variation, we had overall buyers in control. We crossed over, but we ended up closing below this blue and red moving average. We closed below those moving averages, and we closed below my previous bullish candle. So we engulfed that pattern. That could have been another entry. So now, as you guys see, we have 4 entries. We're in the market, so let's let the market fluctuate. And as you can see, the market is forming new lows and new highs. And what I'm doing right now is basically I'm finding levels of support and resistance where the market is being, maintained. So as you guys can see right here, we never had a break structure on this lower time frame for me to even get out of my setup. So for me to get out of my setup, I have to have some type of break of structure. I have to get something like this. Give me something like this. Give me something like this. Let me get out. But as soon as I get this break and I see the market retest, and I'm gonna put my fibs out from right here, to right here. That's measuring this retracement right here. I need to be out. I need to be out of this setup. So, analyzing and maintaining your order is based off your lower time frames, because those are your time frames you're entering off of. You placing your stop losses off of your lower time frame. You placing your projection. Your projection is being based off your higher time frame. And remember, guys, we started off at my daily time frame. Our entries are up here, coming out, because remember I have that 38.2 retracement. That's where I'm at. So now my first projection, negative 27%. That being safe, if I didn't want to trade over the weekend, today is Friday. If I didn't want to trade over the weekend, I could have set my take profit at, somewhere in this area, 0.6863, which I'm only probably about 10 pips away. So it wouldn't have been just a major difference. But understanding AUD USD is not, a highly volatile pair. Catching pips, catching 88 pips, that's a lot. Catching 88 pips is a lot, and maintaining your order on these slower time frames, on these slower pairs, it's simple. It's not easy. It's very simple, but it's not easy. So market ended up going into a consolidation range. We formed a new low, new high. So at this new high point, this is what I'm paying attention to. My zone, my box draw my little zone. So I know the market is respecting this level of resistance. But what am I looking for in order to take another entry? In order to take another entry, what I want to see is the market has a minor higher low, higher low, higher low. So this is my average higher low point. Let me get a break of this level of support, this minor level of support, in order to get entry back to the downside. So boom, I took that entry. I got that minor break of resistance. Minor break of support. Another entry. But now we have multiple entries and on a setup that we're, it's volatile. It's dropping. We're maintaining the order. We're only entering at high points. I could have took entry up here, but I wasn't too much on to break this down. But always remember, I could have took an entry right here. Attention. No lower high point was broken. Have your minor level of support. Minor level of support right here. Boom. And I'm just showing you how to take multiple entries rather than just stacking. We don't stack. We enter off of confirmations. Could have been another entry right here. Boom. First variation. Bearish candle close with no wick to the downside. Bearish candle close with no wick to the downside. That tells me I have overall seller's momentum in the market. Coming over here, take an entry in this setup. Bearish momentum, no wick to the downside. Let me see where we're at over here. Bearish variation. You add these two counters together, it's going to be an engulfing pattern. But remember, this was off of my M30 time frame. Coming over here to the M15, highly bearish engulfing pattern. Bearish candle, small wick to the downside. Another entry right here. Bearish candle, small wick to the downside. So when we're taking these entries, we're looking for volume. We're looking for seller's momentum. We're looking for volatility. Tying it all together, guys. As you can see, I broke the setup down from my monthly time frame to my entry time frames, getting into depth detail on how to maintain the order. I hope this video helps you out, guys. If you have any questions, drop in the comment section. It would be lovely if you guys would like this video, and if you don't already, please subscribe so we can continue to, I can continue to bring more content to the YouTube channel for more viewers. I highly appreciate you guys. Y'all have a best week. I say I'll drop my Telegram group message, drop my group chat information in the description, and link join, guys. I appreciate